Hello and good evening, everyone. I hope you guys are doing well. I'm so sorry for the bit of a delay. Actually, there was a sort of a technical glitch. I don't know why, but because of which, I was into the meeting, but I couldn't see you guys. But then again, the support from the academy just told me to restart the meeting. I did so, and now everything seems to be fine. And you guys are here finally. So I don't know, maybe because of some technical glitch or maybe some error from my side or something. But we were kind of stuck. But now we are okay. So anyhow, let's start now. And I formally welcome you to the very first class of the financial reporting paper over here today at the Hamza Academy. And my name is Qasim Mushtaq. I'm going to be your instructor for the FR. And if I talk about, I'm going to take this privilege to, welcome you all over here today. So, overall speaking, I mean, if I talk about or I give my introduction, basically, I have over 19 years of experience in total in teaching the ACCA students. And obviously, over the years, I have had the privilege of guiding the thousands of students to the success in towards the most critical papers for the ACCA, I mean, the tax paper, the F7, and the SBR as well, right? Now, if we talk about, you guys are already familiar with the Hamza Academy as well. So technically speaking, now this is building up, and Alhamdulillah, we have been able to have a trusted name in the market as well because we have been able to shape the future of the aspiring professionals like you as well. And obviously, we are proud to be recognized for our student-centric approach and for delivering the results that matter at the end of the day as well, right? Now, overall, the teaching these papers, it has been my passion, obviously. And I have my own comprehensive notes as well related to the accounting standards and all. And then obviously, I have a exam focus centric approach basically as well. And obviously with that particular approach, with the notes as well, the tailor-made notes that I've designed as well, they are going to simplify the complex concepts, and they are going to ensure at the end of the day that you excel in your exams, right? And obviously we are going to primarily focus on the past exam papers. Obviously, we are going to get align ourselves with the examiner report that we have for the F7 as well, and the structured guidance to help you understand exactly what the examiner is looking for, and obviously the comprehensive practice of the BPP exam kit, the Kaplan exam kit, along with the mocks as well and the ACCA study hub as well. We are definitely going to be onto a target where we are going to ensure that at the end of the day we are very much covering up as far as our whole course and everything is concerned, right? Now formally going to start and going towards that, one to two things. The WhatsApp group is going to be created for us as well. And that WhatsApp group is something where I will be available. The coordinator is going to be available as well. And then at the end of the day, what you can do is that you can coordinate with us over there. And the best part is of having my number over there is that, if you are late or you sit late for as far as studying is concerned, or like me, you are kind of sort of a night watchman who starts to study at 11:30 p.m. or 12 midnight. And if you're studying and if you come across any problem or something, don't hesitate in as far as dropping me a message is concerned, because obviously and technically speaking, if I'm sleeping, I won't be replying, right? But as soon as I'm up, or if I'm eating, I won't be replying. But as soon as I'm up or I'm free, I'll straight away get to my, I normally, the first thing I do is I check my mobile, right? So I'm gonna check it, and obviously, if you guys have any problem or something, obviously I will be straight away replying you in the form of a simple message or a voice note or a small video or whatever whatever means I have to give you the explanation. I will be definitely for sure providing that as well. right? Because this whole arrangement, this is for you guys, okay? So it has to be as much as flexible, and it has to be, as much as accommodating that it can be, and we are going to try to do that as well, right? So you don't have to wait for the whole week to pass and for the next week to start to come in and then ask me the question or something. Why wait for the whole week when we can straight away have the answer with us, right? So try to utilize the facilities that you're gonna have over here in the most efficient manner that you can, right? Then obviously I will be sharing the link with you of the Google Drive for the latest book and the exam kit as well. I will be providing you with both the exam kits of the Kaplan and BPP as well, along with the book, so that you can have an access to that, and then you can download it from the Google Drive link as well. Because the big files, the size is a bit like larger one, right? So you won't be able to have it easily onto the WhatsApp, right? So I'll be having the Google Drive link for you as well. Then the secret ingredient over the years, which I've observed as far as for the FR is concerned, right? I mean, I can explicitly talk about the FR over here as well. And definitely, this is a sort of a secret ingredient which is over there for the other papers as well. And the secret is that in F7, apart from the practice, which is literally really very important, apart from that, one key thing is required, and that is reading. The more you read, the more you understand. Remember this point. Okay. I mean, if we are doing a particular standard or something, I will recommend you to once read the book as well. One time reading the book, any book, the BPP, the Kaplan, or even the study hub, whatever you want to. One time reading the book or the hub or the whatever the book you want to, that's required. And then you can read it from my accounting standard notes as well. That's going to be more than enough over here. Okay. So why the reading is important? Because there are certain points which are very much or more clearer to us if we do the reading and all. Okay. So have a proper habit of or you should become habitual of reading as well, because that is going to help you at the end of the day as well, right? And then apart from the reading, you have to take out the time for your paper on a daily basis. I honestly speaking understand, and I very much respect it that you are very busy. I mean, with the other course of the life, like for example, your job or your other work or something. I totally understand and I totally respect that. All I'm asking is that you have to take out the time for your studies on a daily basis for maximum 1 hour. I'm not saying that you have to sit and study for at least 1 hour daily. I'm saying the maximum you have to study is maximum 1 hour, not more than that. If you're done in 5 minutes, 10 minutes, 15 minutes, you're good to go, right? Do whatever else you want to do. If you're sitting, you are studying, 1 hour is over, fine. Close the books, close your notes, and go and do whatever you want to do. Believe me, I can write it down on a piece of a paper as a guarantee if you want me to. If you are able to take out the time for your F7 on a daily basis for a maximum 1 hour, uh, you know, and if you do this on a daily basis, believe me, there's no power except the God who can stop you from passing the paper. Believe me. And this is something tried and tested like anything on my thousands of students you know who have tested this approach or who went with this approach and all. They have always been successful like this, right? Last time as well, when I started off for the December attempt over there, when the result came in the July, I asked the students about what was the secret behind or how or what thing basically helped them in preparing for the paper was concerned, or what explicitly you know is the key which they had over there. And believe me, every other student said me one thing, that sir, apart from reading from the notes, one thing was always common, and that is we were reading. I mean, when we started off studying the paper,
or when we started off, like, when we were continuously preparing for the paper and all. Now, one thing we used to do was that was the reading, and then we were consistent. I mean, all the students who were consistent enough to take out the time for the class, or for, like, covering up of as far as the like, the course is concerned, the more consistent they were, the more successful they were, right? So these are the things which I technically required from your end to be there, at least, so that at the end of the day you are prepared well for the exams. Obviously, during the course, there can be the days where you are busy, or you are like, not able to take the class or something, right? I understand you will be having an access to the video lectures as well, so go through the videos and make sure that before the next class, at least you are done with the video, and at least you know that what we were doing in the last class, right? Because in the first class today, we might not be able to as such touch the exam kit normally, because what I do, I cover up a topic and I straight away jump to the exam kit for the sake of the practice and all, right? So this is the approach I am going to have over here as well, that we are going to cover up and then straight away we are going to do the exam kit questions, so as to, like, ensure that our knowledge which we have gotten from the theoretical point of view is then applied onto the questions from the practical point of view, to get the answers or to get the proper practice done. At the end of the day, we are going to do that, right? But at least if you're missing the class or something, or if you have missed the class, try to go through the video lecture so that you can easily cop up, and you can easily see and understand that what we have done, so that before the next class, at least if you have a certain query, you can straight away ask me, and then we can discuss about it as well, right? The main concern. Okay. Don't hold your discussion. Whatever the question you have, you can straight away ask me, and I will, very much be happy to help you and take you along with that. Right. So, this is basically what I have in my mind for now. Now, before formally going towards the paper and talking about, it, and talking about as far as our today's topic is concerned, first, I would like to know about you guys, that what you have done before, what papers you have opted, and this time in this attempt, and how many papers have you cleared so far? Okay, so over here I have this first student with me. This is uh I'm sorry if I pronounce your name wrong, okay? So at least tell me your name as well, so that next time if I call you, I call you with your proper, like, the pronunciation of your name as well, right? So you have to unmute yourself and tell me about yourself, okay? So first one is Natu Sherry. This is, I'm sorry if I'm pronouncing your name wrong.
Yes, I am.
Okay, so what's your name proper?
My name is Natu Sherin Ermin.
Okay. And what have you done before, or what papers you're doing and what you're doing?
I didn't do any papers. This is my first.
Okay. And basically, you had an exemption then if you haven't done any paper before.
Yes.
Okay. And what did you study? Some BS in accounting or something? Accounting and finance?
I studied main level. I studied accounting. Then afterwards, I take a course on accounts clerk.
Mm-hmm. Okay. And now you are working as well, full time.
I am doing a training by YEP Youth Employment Program.
Okay. 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 No problem. So, welcome to the class, Ashari. So it's good to have you here. Now, who's the next one? We have Devishi. Miss Devishi, if you can tell us about yourself.
Yes, good evening, sir. Can you hear me properly?
Loud and clear.
I am Divishi Vinodin and I am from Mauritius. Right now, I am doing audit and assurance with Mr. Hamza and financial reporting also.
Okay. And what papers you have cleared so far?
I have cleared financial management and the law and corporate.
Okay, very good. And you are working?
Yes, I'm currently working as an internal audit officer at a company here in Mauritius called the Suppliers Management Limited.
Okay, okay. Very good, very good. So welcome, Miss Devishi as well. Okay, then we have this is Etwaru.
Uh, Hello, sir. Yes, I'm Itaru Prerna. I
Okay,
have completed level one only, and I am currently uh, studying at the University of Mauritius and together the ACCA. This will be my first paper of level two.
okay. So you are a full-time student then?
Yes.
Oh, very good, very good. Okay, welcome, welcome to the class. So technically speaking, you in the morning you are in the university, then in the evening you are over here, okay? Right?
Yes.
Okay, 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 very good. And then we have this is Gotham over here.
Yes, good evening, sir. So I'm Gautam. So I'm from Mauritius too, and I currently work. I've already completed my F4 and F5 paper, and I've already completed those both papers. I'm doing F Audit and Assurance with Hamza itself.
Okay. And this is the first time for your F7 as well, right?
Yes, first time.
Okay, very good, very good, very good. Okay, Miss Nabu, you're saying that can you get the ID and password for this meeting? Uh, how did you join the meeting, Miss Nathul, over here? Actually, I was having a technical glitch because of which I wasn't being able to join properly, right? So maybe because of that thing, you were not able to join properly, right? But the link which is being provided to you by the academy or the coordinator, that is something you are going to use from the next time. Most probably it was a technical glitch from my side because when I ended the meeting and suddenly started again, everything was back on track, right? So most probably it was a technical glitch from my side, right? And then secondly, you must be having the coordinator's number as well. So whatever the help you need regarding the ID, the password for the meeting or everything, he's the best relevant guy to guide you and help you in this all regard. Okay. And for everybody else as well, that is the same rule. Okay, then we have this is Narvashi.
Hello, sir. My name is Narushi, and I have completed my level one and taxation only in level two. And I'm doing only a financial reporting
Okay. So you
for
have
June.
only opted FR for the June attempt, right?
Yeah, yes.
Okay, okay. And you are working
Yes, I'm working
as
as financial administrator
very good, very good. Okay. And when did you clear the tax?
last year.
Oh, very good, very good. Okay. Welcome, Miss Narvashi as well.
Thank
Then we
you.
have this is Shama.
Hello everyone, I'm Shama and I'm working in the banking sector in Mauritius and I have only two papers left for level 2 of financial reporting and audit assurance. I'm currently doing both with Hamza Academy
Okay.
this month. Yeah.
And this is the first time you have opted the F7, right?
Yes, first time.
Oh, okay, okay, okay. Welcome, welcome to the class. And now we have Yusuf.
Hello, Qasim. Hello, everyone. Uh,
Hello.
I've just I've been accepted for the level one with the BSc
Mm,
in finance, and I am currently working as assistant accountant in a hotel group. And I'm
okay.
looking for seven in the first time because this will help me a lot in my reporting and analytics in my job.
Definitely for sure. Welcome Yusuf to the class over here. Definitely for sure. Yes, you guys are right. The beauty of the paper, if I talk about explicitly about the FR, and that is we cover up the accounting standards over here, in a way that they literally, this course helps us to redefine and redefine our approach, and literally it upgrades this whole paper. It upgrades us in terms of applying and doing our practical work related to the accountancy and everything is concerned, because the most basic standards which are used in a daily routine at our workplace, they are covered over here in the paper F7 basically, right? So definitely for sure this is going to be a very good thing for you as far as your job and everything is concerned. And one thing, if you guys ensure me your regularity and your consistency, believe me, I can assure you one thing again, I'm saying the big statements over here, but technically speaking, I know my expertise, I know my capability as well, and definitely for sure I can rely on your capabilities as well. Just ensure your consistency, ensure your availability. I can ensure at the end of the day, this is going to be definitely the first and the last attempt for the paper. And inshallah, ta'ala, each and every one of you will be able to clear the paper in the very first attempt with very good marks. Consistency is something which I require. Believe me, that is the one thing which I require from you guys. Now, let's just go and formally talk about the paper over here. This is a reporting paper. And if I talk about this paper, one thing is for sure, and that is if I, segregate the paper over here in the context of the theoretical and the numerical part, I can simply say that this paper is around 75% to 80%. This is going to be a numerical or a number crunching paper. Remaining 20 to 25% of the paper is something that you are going to have in the form of the theory, right? So the theoretical knowledge is, or the theoretical questions, you can come across maximum 20% is something. Not, I don't even go for the 25%. I maximum say the maximum questions you can have from the theory side is going to be 20%, and 80% of the paper is going to be the numerical one. So you have to be really very good with the number crunching, and you have to be good with the spreadsheet as well, because we will be using that a lot to do the questions and do the number crunching, right? Now, if I talk about overall speaking, financial reporting. Now, if I talk about the exam format over here, we are going to have the section A over here. In the section A, we are going to have 15 MCQs, and these are going to be of 2 marks each. That's going to be 30. In section B, you are going to have 3 MTQs of 10 marks each. That's going to be 30. And then in section C, you are going to have 2 questions of 20 marks each, and that's going to be 40 over here. So total is going to be 100 marks, and the passing is 50% at the end of the day, right? Now, this section A over here, the 15 questions, the 15 MCQs, they can be from any area of the syllabus. Section B, any area of the syllabus, they can be over here. In section C, we are going to have 2 questions, and these 2 questions are normally from, if I talk about either the pet question, that is, it can be from the consolidation, it can be from the final accounts, where you have to go and you have to prepare an income statement, or you have to prepare a statement of financial position. It can be from the cash flow statement as well, and it can be from the interpretation side as well, where you are provided with the, the information regarding the current and the previous year, and then you have, or you have the competitors' data with you, and you have to interpret the account, you have to calculate the ratios, and then you have to do the commenting and all as well, right? Over here, this consolidation and this final accounts, these are the favorite areas of the examiner, right? I mean, no matter what from these three questions, this consolidation question is something which is always there. I haven't seen a single attempt since the introduction of the consolidation in this paper in the FR. If I go back number of years, I haven't seen a single attempt where the consolidation is not tested. So if I say that one of the 20 marks question is going to be of the consolidation no matter what, I'm 100% right. And then in the second question, normally 75% to 80% times it is the final accounts. Like around 15 to 18%, it is the interpretation or the ratios question. And 1 to 2%, it has been the question is provided with the cash flow. Huh. One thing the examiner can do over here, or it can play with the numbers, and that is he can give you a 20 marks question in which the part A is to have the cash flow statement and part B is to calculate the ratios. Yes, this is what the examiner can do. Or with the final accounts question, he can give you a small 3 number or a 4 number part of the question where he might ask you to calculate one of the ratios, and that ratio is called as the EPS, earnings per share. We are going to study about it when the time comes, right? So don't worry what is that or how we do that. Is a very basic ratio, but we'll learn when we'll grow up in this paper, right? So he can give you the part of the interpretation over here in the final accounts, or he can give you a question where you have a cash flow and you have the number of ratios that you have to calculate. He is going to provide you the list of the ratios that you have to calculate, right? So this is what the overall papers pattern is. My approach is that we are formally going to start from the section A, and then we are going to move down towards the section C. First, what I'm going to do is in our first like around 5, 6, 7 lectures, we are going to cover number of accounting standards, right? Accounting standards related to the assets, related to the liabilities, related to some other stuff as well. First thing, we are going to cover up number of accounting standards. And then when we have grown up as far as the knowledge related to the accounting standards are concerned, then we'll focus on to the final accounts question, because the final accounts question where we have to prepare the statement of comprehensive income along with the financial position, we will be given number of adjustments like 4, 5, 6, 7 adjustments within the question who are going to or which are going to deal with the multiple accounting standards. The examiner is going to give us the scenarios and he is going to test our knowledge on the basis of multiple accounting standards that we will have to deal over there, and then we will have to draft our answer, construct our answer by dealing with each adjustment or whatsoever, right? So after doing multiple accounting standards, we'll do the final accounts, then we will move towards the cash flows, then we'll do multiple accounting standards again. Then we will move towards the consolidation. And then at the end, our last 2, 3 lectures or so, they are going to be onto the interpretation of the financial statements. Overall, at the time of winding up the whole course and everything is concerned. So my primarily, I am going to have my focus onto the section A, but obviously, when we are done with a accounting standard or something, when we are done with the practice of the section A, automatically I will take you to the MTQs, right? I'm going to show you how to deal with the MTQs, how the multitask questions are over there. MTQs means multitask question, that you have a big scenario, and with that scenario, you have different 4 to 5 questions that are being asked from you related to that scenario. So you have to tackle, you have to read, and then you have to answer as well, right? So this is what the whole paper is going to be, and this is what the whole scenario is going to be, and this is what how you have to approach at the end of the day, right? Now Let's start, and let me just take you to the next page. Okay, over here today we are going to start with IAS 16, that is property, plant, and equipment. Now, this is one of the most important accounting standard in the whole of the reporting. I mean, not of the reporting, rather, if I say that this is one of the most important accounting standard in whole of the accounting worldwide, then I'm not wrong, right? And if I talk about from this FR paper point of view, and if I say that this accounting standard is going to have around 6 marks adjustment is over there in the section C in total, normally 6 to 8 marks. I'll go for the 8 marks in the section C questions. And in the section B, that's like around for 4 marks as well. And then in the section A, that is again going to be for around 6 marks. So technically 6, 12 plus 4, 16. Out of your 100 marks, at least 16 to 18 marks are going to be from this standard. That is going to be spreaded in the whole paper, right? If I say out of the 100 marks, around 18 marks, at least 18 marks or 16 marks are going to be from this standard, then if I say this, I'm not wrong over here, right? Because this standard is comprehensively tested in each area. I mean, it can be the part of any question as well, right? So we have to have a very good and a proper focus, onto this standard when we are going to cover this up. Okay. Now, IS 16 deals with overall tangible non-current assets. Tangible means having a physical substance or physical existence. Non-current asset means whose benefit is for more than 12 months, right? So IS 16, the property, plant and equipment is a standard who deals with or which deals with the tangible non-current assets. I mean, with the assets who have a physical substance and whose life is for more than 12 months over here. Now, IS 16 define property, plant, and equipment as asset held for production, for supply of goods, for rental to others, or for administrative purposes, right? Asset held for production means your plant, your machinery. Supply of goods. You have the, the vans with you, you have the forklifters, you have the trucks, or long story cut short, assets on wheels. I like to call it as the asset on wheels because it's more attractive, right? Understandable. So any asset on wheel that you have in the name of the car, bike, bicycle, truck, you can have the aeroplanes as well. They are used for the supply of goods as well, not for the transportation and all. Similarly, the lorries as well. Any asset that has the wheels, that is a category which is going to come over here. For rental to others, you have a rent a car, rent a bike. You have some sort of setup with you. You have a hotel with you or something, right? For rental to others, that's going to be over here. For administrative purposes, your whole infrastructure comes over here, right? So these are the ones which are defined as the property, plant, and equipment by the IS 16 over here. Like, for example, you have a plant and machinery with you, that's going to be IS 16. You have the assets to transport the goods that you have, or the goods that or the assets that you have for your logistics or for your supply chain, they are going to come over here. You have the assets to give out on rent be it the property, but the property is technically not over here because another standard deals with that, right? But apart from that, if you have a bike, a car, a hotel, right? So these are the ones which are, or you have some sort of a setup or something, right? So you are into the catering business and you have the catering setup where you help the people to host their events and all. So you just have your own setup which you do to organize the events or the wedding events or something, whatever, right? So you have those sort of setups which you rent out or you give on the rent or something. So that is something you are going to have it over here. And similarly, the whole infrastructure of the organization is something which comes into the property, plant, and equipment over here, right? Then we have its initial measurement. Initially, all non current assets are measured at cost. Initially, all non-current assets are measured at cost. Now, the cost is all the expenses being incurred in bringing the item of non-current asset to its present location, condition, and expenses incurred so as to bring it to its intended use. So all the expenses being incurred in bringing the item of non-current asset to its present location, condition, and expenses incurred so as to bring it to its intended use. They are going to be classified over here as its cost. Like for example, uh, let's have this basic example first, that it's too hot and humid over there in the Mauritius. So we go to the market to buy a 1.5 ton AC, right? So we go to the market to buy the AC. So the list price of the AC is going to be added up over here or is going to be capitalized over here according to Mauritius, right? Whatever the price is in rupees over there, right? You are going to have that. Like, let's just say, rather than having the rupees, let's just go into the dollars because we'll have to write the little amounts over here. Let's say it's for $1,000. Let's assume the AC is having a list price of 1,000. Now, same case. If you get a trade discount, right? If you get a trade discount or you have a refundable tax, then in that case, it will be excluded from list price. If you have a a trade discount available to you, you sort of end up having a bit of a bargain with the supplier and you are able to get some discount on the spot because of the bargain or something, that is called as a trade discount as well. Or there is some sort of an offer, being given by the supplier, like 10% or 20% off, right? So we are going to net off that trade discount from over here, right? And then we are going to record the list price. If you have paid a tax while the acquisition or while the the purchase of that non-current asset, and that very tax which you have paid, if it's refundable, then you are going to eliminate it from here as well, right? You are not going to have it over here. But say in case if the tax is non-refundable, then you are going to let it be over here into the cost of the your AC or the the non-current asset over here, right? Then you have the delivery charges with you because obviously you bought the AC on the shop and you have not gotten the AC over here to be there in the shop, right? You bought the AC so that you can bring it to your place, then you can install it at your home or your house or your room, and then you can use it to fight against the hot and humid weather, right? So you will have to bring it to the present location because of which you have to pay the delivery charges. Similarly, after the delivery, the AC which has been delivered to your place is packed in the boxes. You did not buy it to be there in the boxes. Obviously, you need it onto the wall, you need it in the room, so you are going to pay the installation charges. Say in case installation charges are 900. Now, for the protection of the AC and all, you install a surge switch, or you install a circuit breaker as well, right? So that, I mean, if there's some sort of a fluctuation in the electricity or something, your electrical appliances or your AC is gonna be safe over here, right? You install that as well. Then, after the installation, the installer guy turns on your AC, and surprisingly, uh, the light goes out. I mean, suddenly the light goes out. I mean, if you have some sort of a load shedding over there or something, it just happens, right? After a while, like around 2 3 minutes, you realize that this is only your place, this is only your house in the whole block, in the whole street, whose electricity has been tripped. All the other houses have the electricity. You check the main switch, which has been tripped. You turn on the main switch on, the light is back. You turn on the AC, and suddenly the main switch trips again, right? Now, after checking, with a big smile on the face of the installer, he says that, sir, if you want to run this AC, you need to have a three-phase meter connection. You need to have a bigger line connection in order to run this AC. Now, the AC is in at your place. It has been installed on the wall, right? But you have not been able to use it because in order to use it, in order to have its intended use, you have not been able to get it done, or you have not been able to get it for its intended use round, right? I mean, you bought a AC so that if it's hot and humid outside, while being in the house or in the room, you turn on the AC, it blows the cool air, and now you straight away get cool down and all. Now this AC, while it's not running, it's just it just looks like a painting on the wall or just a decoration piece, right? You did not spend this whole dollars and thousands of dollars on it as if for a decoration piece or something. Now you go for the three-phase meter or something, right? You go for the installation of the three-phase meter or something. You get it installed, then you turn on the AC, then the AC work, it blows the cool breeze and all, and then it gets into its intended use around, right? So the cost of the three-phase meter is something which is going to be capitalized over here into the cost of asset as well, right? It's going to be capitalized over here, right? Then we are going to have this total cost. Now a question comes in mind. This three-phase meter line, when you are going to have a new electricity line at your place, this line is going to be used, or this meter is going to be used by the other electrical appliances that you have at your place. Like, for example, the washing machine that you have, it's going to use this line. The iron that you have, it's going to use this line. The microwave, the TV, the other ACs and all, the fridge, the deep freezer, whatever you have, right? They all are going to use this, the line or the three-phase meter over here for the use as well. So why to capitalize its cost over here into this AC only? When we ask this question, the answer to this is simple. That were the other appliances working before this meter? Were they working? The answer is yes. So if they were working, we didn't need the meter at that time, right? We explicitly required this meter for this new AC, na? So this new meter's cost is going to be capitalized into this meter's cost, into this AC over here, right? Despite the fact that the other assets are using it as well, right? So that is why we are going to capitalize it over here like this. Done? Now, let's just go to example 2 over here, where we are importing a machinery, okay? Now, let's say, again, we have the list price with us, same excluding trade discount and refundable tax. We are going to have it over here. Then we have the import duties that we have to pay. Right, I have to take it a bit over here. Okay. After the import duties, maybe you guys are aware or not that it is an international consignments rule that if we are importing an asset or we are getting an asset from overseas whose value is US $50 or more, we have to get it insured. So the question comes in this, we have this insurance cost. So now my question is, are we going to capitalize this insurance cost over here? Are we going to capitalize this insurance cost over here or not? If the answer is yes, then why? Or if the answer is no, then why? Are we supposed to capitalize this insurance cost over here or not? I need the answer from you guys. Because see, this is the definition over here that we have, right? And now this is the insurance cost over here. And the insurance cost is the cost that we have to bear if we are importing a machinery from overseas. We have to see and we have to bear this cost because without that, we won't be able to import the item into our country. So the question comes in, should we capitalize this insurance cost or not? Yes. Ms. Divishi, what do you say? Should we capitalize? Any idea, anyone?
Yes.
We should capitalize.
Yusuf, come again?
Yes, I think we should capitalize because if you don't pay the insurance, you won't be able to bring the asset to the business.
Okay, fine. I got your point. Yusuf is saying, and then Miss Natu is saying, Miss Natu is saying that we should capitalize it, right? Because if we don't pay the insurance, we won't be able to bring in the asset over here in our country, right? That is what your points. I got it. Now, I have a second question. What is insurance? Gautam, what is insurance?
So this will give us, if ever there's a loss of value or in bringing the machinery to our place, so we will have a loss in value. So we'll be refunded for that, something like this.
Can you repeat your statement again?
So it is a cost to ensure that the asset is brought to our location, our desired location, and if ever there's any loss in value or any mishap within the asset, so the insurance will ensure that we are refunded for that.
Done. Stay here with me. I have another question. You said that this is a cost that we have to pay so that what you said next?
If ever there's a loss in value,
Stop. You said if there is a loss in value, if there is a loss in value, will be compensated for that, right? But
exactly.
if if nothing goes wrong, then what?
Okay.
Then what? Yes,
Then
this is the point we have to think about.
it is a cost. Yeah, then it is a cost
No, no,
that
it
we
is a cost.
need
It
to.
is a cost no matter what. It is a cost. It is a cost.
Okay.
Insurance is a cost. We are just asking and discussing that should we capitalize it as an asset or not? This is the basic question was, right? Thank you so much, Gautam.
Okay.
I needed to hear this and I wanted others to hear this word. The word is if. If something goes wrong, if something bad happens, if the asset is damaged, if the asset is lost, if the asset is whatever ABCD, but the word is if something goes wrong, will be compensated. But if nothing goes wrong, then what? We'll get the asset. But what about the amount? What about the amount that we have paid? What will happen to that? Obviously, it will go down the drain, right? So the insurance is if something bad is happening, if something goes wrong, if that's, if that, if, right? So if nothing goes wrong, we won't get anything. If something goes wrong, we'll get the compensation, right? Now, what is the definition of an asset? What is the definition of an asset in the accounting? When it is probable that economic benefit will flow towards the organization, it's called an asset. A controlled economic benefit, you can have a control A, B, C, D, whatever you want to add. But how the definition starts? When it is probable that you are going to have an economic benefit. Probable means when you are more than 75% confirmed that you are going to get a benefit, that is your asset. When you are more than 75% confirmed you are going to get the benefit. Now, so that is something we called as an asset. No if and buts. I mean, if we get this, if we get that, that is kind of 50-50. Let's say not even the 50-50 in the case of insurance, God forbid. How many times do we get to hear that the cargo ship met some sort of an accident or something and our parcel never arrived? God forbid, how many times do we get to hear that something went wrong with the DHL or the TCS's, like, the plane or something, or the FedEx plane or something? How many times, God forbid, how many times do we get to hear this? I mean, still, the air travel is the safest among all the modes of travel, right? I mean, that is really very, very, very rare case, na? So by default, the problem is irrespective of the definition of the cost over here and the expenses incurred so as to bring it to its intended use. Without incurring this expense, we won't be able to bring it to the even present location as well. Without incurring the insurance cost, we won't be able to bring it into our country. Agreed upon. But the problem is that while capitalizing an expense or while capitalizing a cost into our non-current asset, we have to see and evaluate by this way that even if it's meeting the default criteria of being called as an asset or not, the insurance by default does not meet the criteria of something being called as an asset. So that is why we cannot capitalize the insurance as an asset, because we are into the if and buts. If you want to record an asset, you have to be probable. You have to be more than 75% confirmed that you are going to get the benefit. Then that is something is your asset. Otherwise, no asset, right? So that is why when we pay the insurance, that is an expense. And when we get the claim, that is an income. Okay? When we pay the insurance, no matter little amount or a very huge amount, that is an expense. And when we get the claim, that is the income. Done? I hope it's clear. If someone has any question or any doubt related to the insurance or something, you can ask me. Okay. So the list price we got, the import duties we got, insurance we cannot. Then we have the delivery charges. The delivery charges are something which we are going to add up over here, right? And then after that, after the delivery charges, we have to have some site preparation cost. We are going to capitalize over here as well. Then we have after the site, we prepared the site where we are going to, use it up over here, and where we are, going to install our asset. We have prepared that site. Then we have site restoration. Okay. We have this site restoration cost as well. Now, I'm going to put a static over here. Site restoration cost. It's a cost that is estimated in today's value that we will have to incur at the end of asset's life to restore the site or environment into its original form, i.e., the way it was before we came and started to use our asset, right? Okay. Site restoration cost is a cost that we estimate in today's value, and that is the cost which we are going to incur in the future after we are done with using the asset. And that cost can be the one where we have to decontaminate the site. For example, we are using our machinery and we are into some chemical business or something. And because of our use, the place where we are using that asset is being contaminated. So after we are done working over there, we have to restore the site into its original form. Similarly, it can be like a let's say we are into the coal mining. We are digging the earth, we are extracting the coal. The machineries are over there which are digging day and night and extracting the coal out of the earth, right? Now, once we are done with the drilling, once we are done with the drilling, obviously we cannot leave that place into the same very form that we have that we are working on. Obviously, we cannot leave it like that with the big holes or the big, like, the heap. What do you call it as? The big, the holes or something. What should we, or the mines, as it is open mines, right? Which might be, not safe for the general public at large, na? So we have to restore the site. We have to restore the place in its original form, or in a better way, or in a better form than in actual it was before, right? Either restore it into the original form, fill the, the deep potholes, or fill the holes or the mines, right, with the stones or the sand, or, whatever. You just have to restore the site. Long story cut short, I mean, try to understand what I'm trying to convey you over here. You have to plane the site again so that it's safe for the general public over there, right? Or you have to restore it into the original form. Similarly, you are into oil rig business, you are extracting the oil from the sea. Once you are done extracting the oil from the sea, you have to restore the site into its original form, right? So that the environment of the sea, the environment for the fish is safe and healthy over there, na? So in order to restore, obviously you will have to do something with the seabed and everything, right? So the cost which you will have to incur after number of years, you are going to estimate it today, and today you are going to capitalize into the cost of the asset, right? This is what is required by the standard as well, right? So that is called as a site restoration cost. Right now, for this moment, I am just telling you one half of the cost. I mean, there is a double entry that we have to pass. I'm writing the double entry over here. We debit the asset over here, and then we credit the site restoration cost over here as a non-current liability. I'm just talking about at the moment with the debit half, because we are talking about the assets cost. We are not over here with the liability, because I have to, discuss this whole accounting standard with you, and then I'll tell you about what to do with the liability half. Let's just stick to the asset half, and that is, we are going to calculate in today's time. Let's say that today we have to restore the site in its original form. Then how much is the amount that we will have to spend on it, right, in today's form? So today, say in case we will have to spend 100,000 if we have to restore it into its original form, na? So this 100,000 is something which we are going to capitalize over here, right? Right, so that is something in present value terms we will be recording this amount over here in today's term, in today's price. Then we have the moving ahead from here, we have the installation charges, right? We are going to capitalize. Then we have the first testing cost. Now, what is the first testing cost? This is the cost that is incurred to test and check and see that whether the asset which we imported is working in exactly the same way it was supposed to when we imported this into our country? Or is it working the same way that it was supposed to be as it is claimed by the supplier? I mean, normally the asset comes in the partner, so we have to assemble the asset as well. Now, saying is does the supplier claims that this asset is going to produce 100 units per hour of B quality or A, let's say A quality and 100 units. Now, the machine obviously comes in the parts. We assemble the machine, right? And we test run it and we check it. Let's say, first time it produces only 80 units of A quality. The machine is supposed to give us 100 units. We tune the machine, we turn up the speed of the motor a bit, and now second time, when we test it, it gives us like around 140 unit of C quality. We tune it up again. So, long story cut short, we test run and we check for multiple times. The standard says till your production in charge, your quality control in charge, or quality assurance in charge does not approve the sample fit for commercial production, till your production and your quality control in charge doesn't approve the sample fit for the commercial production, whatever the cost you are incurring in the name of the testing is going to be capitalized, because you have to bring the asset to its intended use. So in order to bring it into the intended use, you are producing or you are manufacturing the samples to check, to ensure that at the end of the day the quality is met over here, right? So you are going to capitalize it. This is the cost which is allowed to be capitalized, right? And then again, same case, same case, you spent around 800 in the name of the material, in the name of the labor cost, in the name of the overhead cost. So the total expense you got was of 800. But the materials which you got mostly they were not fit for the normal commercial sales, right? But still you were able to scrap them for some value, and they were scrapped for around 300, right? They were scrapped for 300. Now 800 is the cost you incurred, scrapped for 300, you got the 300, so the net cost is 500. So the net cost of this testing is going to be capitalized over here. You are going to capitalize the net cost over here, not the total one. The net cost is something you are going to capitalize over here, right? So that is the first testing cost you will have over here as a net cost. Done? I hope it's clear. Now, once the sample is approved, the normal commercial production starts. After that, the machine breaks down, or after 4 months, 5 months, you retest run after doing the maintenance work or something. After that, the second testing cost, third testing cost, fourth testing cost, or whatever the cost. After that, whatever you do, you cannot capitalize it. Once the commercial production starts, end of the first testing cost. Once the commercial production is over there, no more testing. Next time you do the test runs, they are the maintenance cost. They are the repair and the maintenance. Take it to the income statement, charge it over there. No more capitalizing, right? So that is what we have. Okay. Now, the third point after the first testing, we have the training cost over here. Now, obviously, we got the new technology into our organization. We got the new technology into our organization, and we have to train our employees. We have to train our employees regarding the use of the machinery, right? Because obviously, this is the new technology. We have to train our employees how to use the machine. So we incur a training cost, right? Because if our employees don't know how to use or operate the machine, then how are we going to bring it to the intended use? How are we going to use it, right? So now the question comes in, what to do with the training cost? Are we supposed to capitalize it? If yes, then why? If no, then why? So, what do you guys say? Anyone? Anyone from here?
Training costs should be capitalized
Why?
because of the training productivity will increase.
Yeah, with the training, definitely for sure the productivity is going to increase. Agreed upon. Agreed upon. You're absolutely right. Okay. Miss Divishi, what do you say? What's
I
your
also think it should be capitalized
why?
because that will help to bring it to the intended use. Actually, they will be able to use the asset.
Okay, done. Thank you. Thank you for your point. Okay, Miss Prerna, you
It should be capitalized. If the employees are not trained, they will not be able to use the machine.
agreed upon. Okay. Somebody else, who else wants to contribute to this? Gautam, you want to say something?
So yes, so we won't be able to make the best use of the asset without the training. So we'll have to capitalize.
Okay. So you say you won't be able to have the best use of the asset without the training, right? So technically speaking, we should capitalize it. Agreed upon. Agreed upon. Okay. Now, let's just discuss about the training a bit. Uh, I mean, yeah, training. I mean, I can say the training is basically the know-how. You train the employees how to use. Now, this is what the training is. So this is the know-how, the knowledge, the experience, right? That is what I can say to the training, first thing. Secondly, let's take an example. Me and Gautam, we both go to buy a brand new car, right? Let's just go into the ideal world. We both go and we buy a brand new car at, like, the same dealership. We go, we buy the same car, same specs, same colors, everything same, right? So we are the buddies, the good buddies. So we go and we buy the car, right? Now, what happens, like, when the car comes, we get the car's remote, right? Gotham, like a hero, press the buttons, unlocks the car, sits in the car, put on the seat belt, push the button, starts the car, and there he goes, go and gone, right? Like Fast and Furious, he's over there on the highway and all, right? On me, on the other hand, I'm standing right in front of the car. Uh, I'm looking, staring at the remote. At times, I'm staring at the car. Then I'm staring at the remote. Then I'm staring at the car and thinking what to do. I mean, I don't know how to drive the car. Let's say, I don't know how to drive the car. And I'm all stuck and stand still over there, right? Gotham knew how to drive the car. So that's why he was able to unlock the car and then he just started the car, put it into the gear, and then he went. Me, on the other hand, I don't know what to do, right? The car is readily available for use. It is me who don't know how to drive it, right? I take the help from the Yusuf. Yusuf, please come in and help me to drive the car. He comes, he knows how to drive. He pushes the button, unlocks the car, sits in the car with me, and there he goes because he knew. I don't know. So technically, if an employee doesn't know how to run a specific machine or something, or how to do what job, that is the, I won't say the word if inefficiency, because that's a bit rude, right? I cannot even say the incapability as well. But again, that is the problem of the employee. Secondly, training, knowledge, experience, all of these are intangible assets. These are intangible, these are not tangibles. Point number one. Point number two, there's no doubt these are the assets. There's no doubt about that. These are the assets, but these are the individual's asset. not of the company. Third point, for an intangible asset to be recorded in the accounts, apart from the future economic benefit, apart from the control benefit, apart from the probable word, there is another word, and that is, the intangible asset. It has to be identifiable. Identifiable means having the capability of being separated from the individual or the organization and then sold separately. This is what the identifiable means, right? So, training, knowledge, experience. Just give me a second. So, training, knowledge, experience. Do you think this is separable from the employee? Yes or no? Come on, you guys are silent. Anyone, anyone? I need to hear the word. The training, knowledge, experience. Is it separable from the employee? No, it's not. Let me answer. It's not. I mean, look, the knowledge, the experience, the training that I have. I mean, I've been teaching since 2005. By the end of the March, I will be celebrating the 20 years, right? By the end of the March, it will be 20 years for me to be in this profession, right? So from 20 years, the knowledge, the experience, the training that I've got, this is my, the most precious assets or the invaluable assets that I have, right? This is my asset, but this is not separable from me, right? Nobody can take away my experience, my knowledge and experience from me. It's not a lab coat, or it's not a hat or safety helmet or something that if I wear, I becomes the expert. If you wear, you becomes expert. The knowledge, the experience, or the training that you have, that is your knowledge, that is your asset, and that is inseparable from you. Similar is mine, right? Then, third point, or fourth point, or the fifth point, whatever the number of the point over here is, by default, for the asset, we say it should be a controlled economic benefit. Controlled economic benefit. You cannot control your employee. You cannot control your employee. I mean, I have a question that can your employer control you? I mean, if you're working, can you? Can your employer control? I mean, your employer can have a watch on you. He can have an eye on you that if you, or he can appraise you that you're working properly or not. But he cannot control you, right? In audit, we have this concept of LBDN. LBDN. Look busy, do nothing, right? I mean, there are the days, there are the morning blues, when we don't feel like working. But it's just that we cannot be absent from the office or something. So we just go over there whole day. We are playing solitaire and having our, the thumb and the finger on the alt and the tab, so that if somebody comes, we just press the alt tab, right? Or we have a, hand over on our trackpad, so that if somebody comes in, we just, put it to the left or the right side, so that the other screen comes on the front. But there are some days we don't feel like working, right? So our employer can have a watch on us, but he can never control us, right? Same is the case over here with the training over here. That, I mean, if we are incurring a cost to train our employees, that is the cost which we have to incur to, train our employees regarding how to use the asset. The asset is readily available for the use. I mean, this is we who don't know, na? Calling the expert, he'll come and just push the button and he'll start doing everything, right? Asset is available for use. It is you who don't know how to use. So the training cost can not be capitalized. We cannot capitalize the training cost. Okay. That is what the story is. Done. Afterwards, moving ahead from here, we have subsequent expenditure. Subsequent expenditure is Same case, you incur a cost on your non-current asset in such a way that its performance is enhanced or the useful life is increased. If the performance is enhanced or the useful life is increased, such are going to be capitalized. Such costs are going to be capitalized, right? So you incur a cost because of which, the performance of your non-current asset is enhanced or its useful life is increased, they are going to be capitalized. Like, for example, uh, you have some sort of a unit or a motor being installed in your asset, which makes it to make 100 units per hour. You install a bigger, better motor, because of which now you are able to manufacture 120 units. So technically from 100, you went on to the 120 now. Your performance is enhanced. This sort of an expense capitalized. At first, you had a useful life of asset of 5 years, but you installed some safety feature on it, some upgradation on it or something, because of which its useful life increased, right? So if this is the case, the useful life increased, they are going to be capitalized over here as well. They are going to be capitalized, mean they are going to be added into the cost of the asset, right? Similarly, any repair, maintenance, any repair or maintenance, okay, T-N-E-N. Okay, here we go. Now let's just, okay, any repair and maintenance that you are incurring, they are going to be expensed out. They are the revenue expense and they are going to be taken to the income statement as and when incurred. Okay. Any repair and maintenance, any part replacement or something, that is something which we are not going to have over here. Right? Okay. Earlier, we talked about this site restoration, right? This site restoration. Now, let's just go for an example of site restoration as well over here. Suppose we have a non-current asset with a value of 100,000. Present value of site restoration is 20,000. Discount rate of the company is 10%. Useful life is 10 years. Show the journal entries. How the working is going to be related to this. Now, for those who came via the ACCA channel, you have studied the paper MA, where you read about the concept of time value of money, the present value, future value. Or some of you have attempted the paper F9, the financial management as well. So you must have read the time value of concept like anything over there. Or the graduates from the university level, they have studied the financial management or the time value of money concept as well. If not in detail, but to some extent, you guys must be aware about that as well. And the concept, the time value of money is that the buying power of $1 today is more than the buying power of $1 in the future, right? That is what the time value of money is. That today $1 is worth more than $1 in the future, right? Like for example, if you remember in your childhood when you were just a kid, if you had some sort of an interest in the cars or something, or if that at that time, if you get to hear something from your parents about the old rates of the thing or something, nah? If you try to have this conversation with your elders about their time, that what was the price of certain items, they are going to tell you the amounts by which you will be shocked or surprised. I mean, my parents, they got married back in, I guess, 1971 or something, right? And whenever I have a talk with them or something, I remember once they told me at the time when they got married, at that time, the gold's rate was at around 250 rupees per 10 grams at that time, 250 Pakistani rupees at that time when they got married. Today, 2024, the gold rate in Pakistan for 10 grams is like around what? 248,000. Yes, 248,000 or 245,000 or something. So back then it was just 250 rupees, 250 rupees only. Now 250,000 or around 245,000. Look at the huge gap, the time value of money, right? Similar is the case with the cars. Back in, I remember, uh 2007 or 8, yeah, I remember when I bought my first car from my own savings and all, na, it costed me for like around what, 800,000 or something, or 900,000. Yeah, not more than that. 8 or 900,000, not more than that. But now, if I talk about the Corolla again, the Toyota Corolla, the Corolla X is available for like around what, 6.5 million or 7 million or something, right? So at first, back in 2007, 8, it was just 800,000, but now 6.5 to 7 million is the cost. See the huge gap or the difference that we have, right? So this is what the time value of money is. This is what we are going to look over here. So in today's term, if we talk about the present value of the site restoration is just 20,000. That is something which we have to do after 10 years. After 10 years, right? But in today's term, the value is standing at 20,000, right? Now, at start, at the start, when the asset is bought, we are going to debit the asset for 100,000. We are going to credit the cash for 100,000, right? And then restoration, we are going to debit the asset with 20,000, and we are going to credit the site restoration with 20,000, right? So automatically the revised value of asset will be 100,000 plus 20,000 is 120,000. Now, at the end of year one, we have an extract of statement of comprehensive income, extract of statement of financial position. Okay. Over here, in statement of comprehensive income or income statement, we are going to have a depreciation charge. Depreciation charge on the asset will be 120,000 by 10 is 12,000 per year. So we are going to have a depreciation charge of 12,000 over here. We are going to have the asset at 108,000, right? And then for the liability part, we are going to have unwinding of discount. Unwinding of discount is the amount that we have to spend after 10 years. It has been compressed to the present value of 20,000. Gradually, as the time passes, the value is going to uncompress. Look at my fingers. The value is going to uncompress, right? It's going to increase. So we have to do this increase on a yearly basis, and that is present value of liability multiplied by discount rate. That is 20,000 into 10%, and that is 2,000. The double entry of unwinding of discount is going to be debit, statement of comprehensive income, credit, unwinding of discount with 2,000. So technically speaking, in the finance cost, we are going to have unwinding of discount at 2,000. And then over here in non-current liabilities, we are going to have the site restoration cost at 20,000 first plus 2,000, and that's going to be at 22,000, right? So that is how we go over here, as far as the recording is concerned. This unwinding of discount, we can also write it, the site restoration cost over here, right? I've written the double entry over here for your understanding as well, right? Okay, I hope it's clear to you. If you have any question or something or any doubts, you can ask me. Otherwise, we are good to go. Okay, now, let's just take a break, maximum 5-7 minutes. Let's just get up from our seats, walk around a bit, stretch our legs, and then we are going to come back, and then we are going to resume from this very same point, okay? Let's have a break for now. Back, so let's resume now. Okay, so now we have a question from BPP exam kit. This is question number 24 of section A. I just want to give you an idea. And this is the question over here. Now, Foster Company has built a new factory incurring the following costs. We have the land, material, labor, architect fee, surveyor fee, site overheads, apportioned administrative overheads, testing of fire alarms, and business rates for the year. And the question is, what will be the total amount capitalized in respect of the factory over here? Right now, this is the typical type A question that you can expect from what we have learned so far. What we have learned so far, right? Now, obviously, the amount which can be capitalized over here is something. We have the land over here. Yes, we can capitalize it, right? Then the materials, they can be capitalized. The labor cost is capitalized. The architect fees capitalized. The surveyors fees, capitalized as well, right? Then if we talk about as far as the site overheads are concerned, site overheads are the other, the variable costs that have been incurred. So yes, we are going to capitalize that as well. Now, this apportioned administrative overheads, this cost, this has nothing to do with as far as the the building of the factory is concerned. These are the administrative overheads, right? So these overheads, this 150, it cannot be capitalized because this has nothing to do with as far as the construction and everything is concerned, right? Testing of fire alarms, yes, this is the testing cost, it can be capitalized. And then the business rates for first year. Business rates has nothing to do with as far as the construction and everything is concerned, right? So the amount to be capitalized, this is going to be 1,200 plus 2,400 plus 3,000, 25, 15, 300, and then 10. So if we add these amounts, 1,200, 2,400, 3,000, 25, 15, and then we have 300 plus 10, we get what? 6,950 or 6.95 million. So the answer is going to be option B over here, right? So the amount to be capitalized is going to be 6,950 over here, right? So actually we learned the basic concepts that what costs are to be capitalized, right? Or what amount can be capitalized and all that. So we went according to that and we capitalized this particular amount over here. Done. So that is how you guys are going to have the questions again in the exam kit as well related to the said topic and all. Okay, moving it from here, let's just talk about subsequent measurement now. The subsequent measurement is subsequently all non-current assets can be measured by using any of the two following models. One is the cost model. Second one is the fair value model. Right? Now, the cost model is the asset is reported at its carrying value. The asset is reported at its carrying value. Carrying value is cost minus accumulated depreciation, right? Cost minus accumulated depreciation is going to be the carrying value. And depreciation is called as the wear and tear, right? Or it is called as the decrease in the value of an asset due to its usage only, right? So depreciation is basically decrease in the value of an asset due to its usage only. And if we talk about the standardized definition, it is the systematic allocation of the cost of an asset to income statement according to its usage on a pro rata basis. It is the systematic allocation of the cost of an asset to income statement according to its usage on a pro rata basis, right? That is what we call as the depreciation, that it is that systematic way by which we charge the cost of the non-current asset to income statement according to the chunks that we believe that we are using the asset and all, right? Now, as far as the methods of calculating depreciation is concerned, we have the straight line method, we have the reducing balance method. Under IS 16, we have these two methods for the depreciation that we can use, right? Now, straight line method states that cost minus scrap value or residual value. Just hold on for a second, please. Okay, I'm back. I'm so sorry for the hold. So we were talking about the straight line method over here. That is the cost minus scrap value or the residual value. Divided by the useful life, right? So we are going to get a specific amount over here, right? Now, we are already done with understanding of what the cost is. We have comprehensively discussed about what the cost is, right? Now, let's just talk about the scrap value. This amount and this amount over here. Okay. We'll talk about what a scrap value is. We'll talk about what a useful life is. And then we'll talk about what is this number. Scrap value, the estimated value at which the management expects to sell the asset at the end of its useful life. Right? So scrap value or residual value is the estimated value at which the management expects to sell the asset at the end of its useful life. This is called as the scrap value, the scrap, the residual value. The management estimates an idea around about what value we will be able to sell the asset at the end of life. That is what we call as the scrap value or the residual value. Useful life, the estimated time period over which the asset will be used, right? This is the estimated time period over which the asset will be used. This is called as a useful life. And this amount is going to be fixed depreciation charge per year for every year, right? Now, under the straight line method, the depreciation charge is fixed basically, right? Now, let's say we have an assets cost at 100,000. Life is 10 years. Scrap value is 10,000, right? So straight line depreciation is going to be 100,000 minus 10,000 divided by 10 years, right? So we get 9,000 per year, the depreciation charge, right? So 100,000 minus 10,000 by 10, we get a 9,000 depreciation charge. And this is the fixed depreciation charge per year that we are going to have, right? Now, second one was the reducing balance method, right? In the reducing balance, the formula is cost minus accumulated depreciation. That is, we get carrying value. With that, we multiply percentage of depreciation. So we get, the depreciation charge for a specific year. Right? And let's just set it a bit. We have to create the space in the one line. So accumulated depreciation is equal to the carrying value, right? Okay, and then done. Here we go, right? So cost minus accumulated depreciation is the carrying value, multiply the percentage of depreciation, and then we get a depreciation charge for a specific year. Like, for example, we have an asset cost at 100,000. Depreciation base is 10%, a reducing balance method, right? And then we have a scrap value of 10,000 as well, right? Now, the depreciation charge per year will be calculated as year one. The formula is same, this one. Uh-oh. Okay, what I've done. Why is it not moving from here? Okay, now this is the technical glitch or something. The box is still here. Right, so anyhow, I'll get to it later. And here for year one, the formula is the standard formula is going to be the same. That is the cost minus accumulated depreciation is equal to carrying value multiply the percentage of depreciation. We get a depreciation charge for the year. Right? Now, year one. If we look at the whole formula before going towards the year one, I want to show you guys that scrap value is nowhere to be seen in the formula. So technically, the scrap value in the reducing balance method is totally ignored. The scrap value, the scrap value, in the reducing balance is totally ignored. Right now, the cost in the year one, that is 100,000 minus accumulated depreciation is 0. So the carrying value is going to be 100,000 multiply the percentage depreciation is 10%. So we get a depreciation charge of 10,000, right? In year two, 100,000 cost minus accumulated depreciation for now. Accumulated means altogether, right? So before this, we have only a depreciation of 10,000. So we are going to get a carrying value of 90,000. With that multiplied by 10%, we get a depreciation charge of 9,000. Then we have year three, 100,000 cost minus till now 10 plus 9, 19,000 accumulated depreciation equals we are going to have what 81,000 over here multiply by 10%, we get 8,100. Then in year four, 100,000 cost minus total accumulated depreciation 10 plus 9 plus 8, that is going to be what 27,100 equals carrying value of 72,900 into 10%, we get what 7290 over here. So technically, look, every year the depreciation gradually is reducing. The depreciation charge is gradually reducing. So that is what is the reducing balance method. Gradually, the depreciation charges balance is reducing. Okay. Now, point to remember, just technical hand-on knowledge, on this thing, that in the straight line, normally the asset value goes to 0. But in the reducing balance, the asset's value is never 0. There is going to be left something. It will never ever be a 0 in the reducing balance. The remaining value of the asset will never be a 0 in the reducing. But in the straight line, it can be 0. Okay? Done? Okay. So we have these two methods, the straight line and the reducing balance in the cost model, which we have just talked about. Moving ahead from here, we have a fair value model as well. The fair value model is the asset is reported at its fair value. Fair value is the value at which an asset could be exchanged, a liability settled between knowledgeable, willing parties in an arm's length transaction, right? So the definition of the fair value is the value at which an asset could be exchanged between the knowledgeable willing parties in an arm's length transaction. Long story cut short, for the sake of understanding, I always say that the fair value is the triggered value. Triggered value means the value at which the transaction is triggered. Okay. I normally say, for the sake of understanding or make you guys understand, I say that the fair value is the triggered value, or that is the value on which the transaction is triggered, right? That is what we call as the fair value. Now, the fair value can be the market value as well. The fair value can be higher than the market value. The fair value can be lower than the market value. There is a difference between the market value and the fair value. At times, both can be same. At times, they can be plus minus. Now, let's just take a look at an example. For example, how to give you the example for this, the basic one that you can understand. You go to the market, you go to the market and you want to buy a brand new car, right? You go to the dealership, you choose a car to buy, you straight away get the car, you pay for it, and you come out. Whatever the market value of the car is, that is going to be the fair value because that is the transaction at which the transaction has triggered, right? Whatever the value of the car is. Now, you want to get a brand new car, but the car has been newly launched in the market, right? This is something very common in Pakistan, basically. The car has been recently launched in the market, and the booking time for the car is like around, or the booking time and the delivery date, the difference is basically around of 3-4 months. That is, you are going to pay in full today, but you are going to get the car in 3 or 4 months' time. That is the delivery date. So you have to wait for 3-4 months for the car to come. Like, for example, the car is for 6 million. You are going to pay the 6 million today, and then you are going to wait for 3-4 months for the car's delivery. Then after 3-4 months, you are going to get the car, right? This is the normal practice. And that 6 million which we have paid is the market value of the car. Now, you want to have the car right now. You can't wait for 3-4 months, right? You are eager to have the car right now. You don't want to wait for 3-4 months. And then you are approached by another car dealer from another showroom who says, I can straight away give you the car's delivery right now, but I will charge you 300 or 400,000 rupees extra for the car. So 6 million is the car, but you are going to get it for like around 6.4 million, right? Another person has approached you, another dealer has approached you from another showroom who says that if you want to get the car right now, I can get it delivered to you, but I will be charging 6.4 million. Now, he's charging an over and above amount. He's charging an over and above amount, right? Now, this 6.4 million is the value at which you can get the car, he can get the money. So the asset is exchangeable between knowledgeable, willing parties. You know what is the price of the car, that is 6 million, right? And he is selling you the car for 6.4 million just because you cannot wait for 4 months, right? Knowledgeable, you have the knowledge of the market. He has the knowledge of the market as well. Knowledgeable, willing parties. You are willing to buy, he is willing to sell. Nobody's forcing you, nobody's forcing him. In an arm's length transaction, arm's length means the buyer or the sellers are readily available in the market. Nobody is pushing nobody, right? Nobody is pushing nobody. It means no one is pushing you to do this, right? I mean, if you are willing to buy, you can buy. So now the 6.4 million is going to be the fair value, whereas the market value is 6 million. Similarly, suddenly you get into some emergency or something and you want to raise the cash. You have a car that if you give the ad in the newspaper or something, and if you give a proper ad or something, you will be able to sell for 6 million. But you right away, because of the emergency, need the money, right? You straight away need the money right now, like, within the matter of some hours or something. So you put an ad in the paper or you put an ad online that you are willing to sell your car for 5.5 million. You are selling your car 0.5 million or 500,000 lesser than its market value, right? Now, the price at which you are willing to sell the car is lower than the market value. Again, this is the between the knowledgeable willing party. So if a buyer comes in, he ends up getting the car from you for 5.4 million. So 5.4 million is going to be the fair value of the car, whereas the market value is 6 million, right? So the fair value can be above, fair value can be lower as well, right? Now, overall speaking, how to account for the fair value in the accounts, right? How are we supposed to record the fair value in the accounts? Now, this is the example, or this is the point which comes in. So obviously we have to go for the example, and that is an assets cost is 100,000. Life is 10 years. After 3 years, the asset is appraised as having a fair value of 90,000. How will this be reflected in the accounts? How is it going to be reflected in the accounts? Now, in order to record this, we are going to have 2 to 3 step approach. Step 1. Calculate the carrying value of the asset at the exact same date on which the fair value of the asset is given to you, right? You have to calculate the carrying value of the asset on the exact same date on which the fair value is given, right? For example, if you look over here, after 3 years, the assets value is 90,000. So this is the cost. You have to calculate the carrying value of the asset. That is going to be after 3 years, right? First thing first. So if this is the case, we can go over here. The carrying value of the asset at the end of year 3 will be 100,000 by 10 into 3 is 30,000 accumulated depreciation, right? So the carrying value is 100,000 minus 30,000 is 70,000. The carrying value, right? Then step 2. In step 2, compare the fair value with the carrying value, and the following results will be revealed. That is, if fair value is equal to carrying value, do nothing. Now, the results are now, if when you compare the carrying value of the fair value with the carrying value, not the carrying value, the fair value with the carrying value, and if the fair value is equal to the carrying value, do nothing. If fair value is greater than carrying value, that is going to be a revaluation gain, right? And if the fair value is less than the carrying value, then this is going to be a revaluation loss, right? So when you are going to compare at the end of the year 3, the fair value with the carrying value, if the value is same, do nothing. If the value is higher, it's a revaluation gain. If the value is lower, it's a revaluation loss. Step 3, how to record. In the step 3, we are going to see how to record. Now, according to example, compare the fair value and carrying value. That is 90,000 in comparison with the 70,000, right? This is the fair value over here in the example, like 90,000, right? And the carrying value is 70,000, right? So we are going to have the comparison to both, and then we are going to get the 20,000, the revaluation gain. Now, the net entry to record the revaluation gain is going to be debit the asset with 20,000, credit the revaluation reserve with 20,000. right? And the revaluation reserve is going to go into the equity in the statement of changes in equity, right? So that's going to what is going to go over there, right? This is the net entry. Alternatively, what you can do is you can go for the complete entry, and that is you are going to debit the accumulated depreciation with 20,000, and you are going to credit the revaluation reserve with 20,000. This alternate entry is done where the cost and the accumulated depreciation accounts are maintained separately. If we just have a carrying value account, then we go for debiting the asset and crediting the revaluation reserve. Where the accumulated depreciation accounts are maintained separately, you debit the accumulated depreciation account first, right? Because we have the formula cost minus accumulated depreciation is carrying value. Huh? So the cost over here is 100,000 minus, we already had an accumulated depreciation of 30,000. We are going to reverse the 20,000 from that, and then we are going to get the balancing amount of 90,000. And this 90,000 is going to be equal, or this carrying value is going to be the equal of your fair value of 90,000 over here as well, right? So technically speaking, if I have to, prepare the extract of statement of financial position, I'll have my asset at 90,000, and then in the equity, I will have my revaluation reserve, and that revaluation reserve is going to stand at 20,000, right? And in the next year, the depreciation charge or the revised depreciation charge on revalued asset will be revalued amount divided by remaining useful life. Revalued amount is 90,000 divided by remaining life is 7 years, and then we get what? We get 12,857 over here, right? So this is what we have over here. Okay. So this is what I have for now. Let's just stop over here because we are going to have some complex example, but I don't want to go into that right now, okay? Because today is our, first lecture, and I don't want to overwhelm you with lots of information over here, right? Although we have covered the basics today, but these basics are something which we have read before, but today we had a different sort of an angle to look at these all, like, the concepts and everything. Now, these Word files, or later the Excel files, which I'm going to create in every class, they are going to be available to you, on the Academy's portal on a regular basis. That is, if, like, today we just had our first lecture, now when you are going to have an access to the portal where you have the access to the video if you want to play from the lecture, right under it you will see the Word file, the downloadable form. You will be able to download it onto your gadgets, and the downloadable form, you are going to look at the lecture number 1 Word file along with the date as well. So this thing is going to be available to you, so that when you are sitting, when you are studying, you have this resource with you as well, from which if you have to compare and you have to see and you have to redo the calculations or you have to re-go through it, you can, right? Okay, so this is all going to be from my side for the day. Now, if you guys have any question or anything that you guys want to add or ask, or you want to give a suggestion about or something, you guys can. I'm open on to it. And I want to have your feedback about today's class as well. I understand we did not happen to do the questions from the theory, sorry, not from the exam kit today. I understand we have not been doing the question from the exam kit today because today was the basics. I had to get you onto the track, and then I had to talk to you about the paper as well. But I've shown you one example over here that how we are going to have the questions in the exam kit, right? Now, next time when we are going to come in, obviously we are going to we are going to cover up from as far as the notes are concerned or the standard is concerned, and then obviously we are going to practice from the exam kit as well. Definitely in the next class we are going to have a bit of a comprehensive practice from the exam kit, from the section A and from the section B as well. So don't worry about that. I mean, if you have that thing in the mind that we were supposed to do or we should have done some of the exam kit, that is coming your way, from the next class onwards. Definitely in every class we will be touching and we'll be doing the exam kit, right? Now over here what my pattern is, around 80 to 85% of the exam kit, 80 to 85% of the exam kit, this is something which I do in the class right in front of you guys, right? Remaining 15% and the Kaplan exam kit, that is something you guys have to do on your own. But it doesn't mean, when I say it's on your own or something, it doesn't mean that I'm not going to help you or I'm not going to consult you. As I told you earlier, I'm available full time, 24/7, right? So what you have to do is when you are sitting, when you're doing the question, you come across a problem or something, send me the question. Take a picture, send me the question, right? Help. I need to understand this, or I don't know do what to do about this, or what's the answer for this one or something, or whatever, right? So you don't have to, worry about how to solve the question or what to do about it. Okay, this is me who is going to help you and guide you through, right? So don't worry about that. I will be taking you along, in those as well, right? So any suggestion or your opinion about today's class, Miss Divishi? Yeah, Miss Nathu, you can say as well. Yes. Miss Nathu, can you hear me?
Sir, I want to know a bit more about level one.
Okay, what do you want?
Uh, Procedures, fees, papers, exams, and
Okay, what you can do is you can, I mean, regarding your queries that you have, now, I guess you must have the coordinator's number with you, like the academy's coordinator, right? You might have his number, or let me just type in the number, the coordinator's number over here. Let me just extract out the number. Okay, this is 9191 500. Okay, so this is plus 92301 9191 500. Yeah, this is the coordinator's number. Uh, just drop him the WhatsApp message, whatever you have, and he'll be happy to assist you and guide you. Okay, whatever the queries you have regarding how to enroll or the exemptions or anything, any question you have related to the course side, apart from the what do we say as the course, the contents or something. The course is something which I have to do. Apart from that, from the administrative point of view, he's the one who is going to guide you and all. Okay. Then, who else wants to add something? Ms. Devishi, would you like to add something?
No, sir. It's everything is good. The session today was quite enriching. Everything is good. Thank you very much.
Okay, okay, thank you. So, Yusuf, what's your opinion?
Yes, I just wanted to point out something. The last part was a bit quick. to be
Okay.
honest.
Okay. Okay. I understand. I understand. I understand.
Good question. But, we can. I will have it. We'll have the Word document, right?
Yeah, you are definitely you're going to have.
I'll go for it and ask you any question if I have. So how can we contact you?
I told you earlier after today, I mean, the WhatsApp group is going to be once you get yourself enrolled in the course now, the coordinator is going to create the WhatsApp group. Okay. And I will be over there in the WhatsApp group as well. So technically you will able to see my number, and then you can either contact me within the group or you can send me a private message, and then whatever the queries you have, you can straight away start sending me those. Right. And obviously I'll be then talking about those as well with you. Actually, as
Overall,
far as yeah, sorry,
it was a very interesting start.
I don't get what you said.
I'm telling you, overall, it was a very interesting start.
Oh, okay, okay. Thank you. Yeah, as far as for the last part is concerned, as you must have noticed that today, because of the technical glitch, I was kind of like, around 14 to 15 minutes late in joining the class, I believe. Right. So our 14-15 minutes were wasted in the start. And then obviously I have made some targets, although I have some extra classes in the bag as well, that if I feel like that I need to have some classes as an extra for the sake of the practice or something, I have that cushion with me as well. But again, we always have being an instructor now, we always have a certain target in the mind that we need to talk about up to this point now. So that is what I did in the IS-16. IS-16 is not finished. It's kinda 40% complete till date, right? So I had that target. I wanted to complete it. So yes, you are right, definitely for sure. I was a bit quick in the last part as far as covering up the example and talking about the revaluation and everything is concerned. I understand and I accept that. And that is the same part from where in our next class we are going to have a start. So when we are going to have a start, we are going to talk about what we had today. We'll talk about a new example regarding the fair value model, because that is the trickiest part among the cost and the fair value model. The revaluation, when it comes into the play, that is the trickiest part. So we are going to have another example with that part as well, and then we will move forward. And then yes, once in the next definitely the IS-16 is going to end. Once we are done with the standard, we will do the questions from the exam kit as well, right? So the theoretical knowledge which we have gathered or captured today, and in the next in the start of the or the first half of the next class, the theoretical knowledge which we would have gathered or captured, we are going to straight away apply it onto the questions, right? So I don't believe I know this for a fact that every point, if something is left behind uncleared or untreated, that is definitely going to be cleared in the next one. I'm sure about that, right? And I will request the coordinator to create the group earlier on his earliest maximum, like within a day or so that when in the next class you guys come, before that you have the notes with you, the book with you, and the kit with you, so that the point I said earlier, that I want you guys to have a bit of a reading one time from the book, one time from the notes as well, and from this as well, so that you guys are done from your part at least, or the part from your side at least is clear and done, so that when we are here, we all are equipped and we are at the same level, and we are ready to move forward again, right? So this is what I have in my mind. Dan, and anything else? Anyone? Yes, Yusuf?
Thank you.
Yeah, no problems. Thank you. So, anyone else who wants to say anything or something?
Yes, actually, me, what I like the most about this session is that it is very interactive. So it makes the class very interesting, and we are more focused when it is interactive. Thank you for that. Um,
Thank you. Okay. Now, Gautam, your point is really very nice, and I thank and I appreciate and I thank you very much for appreciating and telling me the honest opinion about that. This interactiveness is a two-way traffic, basically, right? What I liked mostly about today's class was that whenever I asked the question from any one of you guys were always there and you were ready to unmute yourself and you straight away had your side of the input, your side of the story and your side of the the input as well, right? Why that? Our discussion was really very healthy, right? I got to know, I got to hear what's in your mind, what you are thinking about a concept, and then similarly, I was over here to explain from my side, and it was a two-way thing, right? In order for a class to be interactive, I always require the input from all of you, right? I have this participant window on my one side. I'm looking at all the names, right? And when I was asking the question and I was asking about you and from you, all of you, you were, what should I say? Um, I'm not finding the word to say, but kind enough, let's say, you were kind enough to unmute yourself and tell me, or you guys gave me your input side, or you gave me the answers which I wanted to hear, right? So this thing is always going to be from day one till the last day. This thing can continue if I keep on having the input from your sides, right? So this is what this is a secret for this. And thank you so much for everyone over here today. I really enjoyed today's the class and the session as well. Again, I got to learn from you guys, and definitely for sure something you must have learned from me as well, right? So I guess this is all. If somebody wants to add something, you guys can. Otherwise, we are done. And definitely for sure, next Thursday I am going to see you again, same time, same place, same channel. Not the same time, but earlier. Definitely, I figured out in the break time, I figured out the problem basically, which I had at my side, because of which I got late. Unintentionally, it was an error and a mistake because of which I was not able to start the class from the proper time or something. It won't happen again. So next time on Thursday, next Thursday, I will see you at exactly the starting time of the class or 5 minutes before that, right? So till then, what you have to do is you have to take care of yourself, your family, your friends, and the people around you, right? So till we meet again, time to say bye. Take care. Bye bye.